Good evening, traders. It is Wednesday, July 29th, and it is time for the weekly swing trading video. This could be the shortest weekly swing trading video I've ever done. I'm going to keep it light, going to keep it short, going to do some market analysis. We'll take a look at some possible trades. We'll call it a night. This is going to be a very quiet time for the market. Before we get started, let's take a look at our positions, see where we're at, and I'm going to put this into view. So these are our open positions. They were closed out last week, most of them via expiration. So we had the TWLO trade that we did, PayPal, Facebook. These were all pre-earnings trades that we had done, and they were strong into earnings. We knew that. We sold these below technical support with a week and 2 days left until expiration. They yielded really nice profits, 25%, 25%, 20%. And then we also did an SPCE trade that came out Sunday night. I posted a video. That was a nice trade for us, a 25% winner. Unfortunately, these four gorgeous trades were wiped out with our first loser in 6 months. MOMO. We were short the July 24th $19 put and long the $18 put. Stock finished at $17.50 last Friday. The tensions between the U.S. and China really ramped up when we forced them to close their consulate in Houston. They in turn forced us to close one of our consulates in China. There's been a lot of trade war talk recently. We removed Hong Kong's favorable trade status. So all of this culminated very, very quickly. We had an overnight drop in the stock. Not a lot you can do about it once the stock is in the money. So it happens, but it's a warning sign and it tells us that we need to tread very cautiously. We did also have a nice Amgen trade. So overall, we've made money in the last round of trades that we had open. SPCE would have expired this Friday, but I suggested buying it back. I think the ask on that was 2 cents, maybe even a penny. You could have bought it back in for. We have a clean slate to work with. And I've got to tell you, when I started watching the price action last week, we had news from Microsoft, Intel, Netflix, Tesla. In every instance, those stocks were down. I started to get pretty nervous about it. I thought, gee, maybe we're going to get that sell off before I thought we would. But those positions, thank God they expired worthless. So now we can rest easy, evaluate the market. We don't need to worry about anything. We are in cash. But you can see this is the high from June 8th. So we're basically 2 months and we have not gone anywhere. Incidentally, on this rally here, I took a pause right in here. We didn't do any trades. We let these trades expire. Time decay was working in our favor. I had mentioned to you that the market rally was getting overextended. Boom, market pulled back. No problem. We didn't put any new trades on. The trades that we did have on expired worthless. We had this nice downward sloping trend line, had a little bit of a breakout to the upside. 1, 2 tests of that major support level at SPY 200-day moving average. Okay, I've got some clarity. I can see that the market has tested the support level twice, and now it's going to start to rally up. So we progressively sold out of the money bullish put spreads. Right now, I don't know what the market is going to do. I need to repeat this. I don't know what the market is going to do. I am a directional trader, and when I don't have a sense for market direction, it means don't do anything. Stay in cash. Wait for clarity. When you get that clarity, then you can nail some trades. That's where we're at right now. This resistance level is pretty stiff. 1, 2. I also see a lot of things on a macro basis that I do not like right now in the market. Well, gee, if you don't like them, doesn't that mean that we go out and buy some puts? Shouldn't we buy some puts, Pete? No. We need to have a market breakdown, and we need technical support levels to fail. Well, what might those support levels be? We've got a number of them that we can lean on. If you're a very, very short-term trader, you can use very, very short-term horizontal support levels like this low right here. That would be a natural breach of support. You could see that low is at 319 roughly. Let's call it 319.50, I think is where I identified that support level. Here's another one right in here. That's down to the 312 level. So 319 and 312, those are two support levels that we can watch. You also have the 200-day moving average coming in roughly at about 304. That's another level. So these levels can fall very, very quickly or not. We could have long red bar just like this. Look at that fall right there. We went from about 328 and in a matter of 2 days we went down to 300. So that was about a 300 point S&P drop that happened in a matter of 4 days. So that can happen very quickly in here. I don't know that market moves on the downside are going to happen gradually. They just don't seem to anymore. Once we get the programs kicking in, the moves happen very, very quickly, and then the selling's kind of over and done with. We had the largest market crash this year since the Great Depression, and it lasted about a month and a half. That was it. And then, boom, there's the low. We rally right back. So we have to be super, 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 super careful when we're shorting the market because these sell-offs don't last very long. You have to be very nimble. You have to be short. You have to take profits. When the market's coming in, you need to set those targets. You need to be a buyer to cover that position and take profits when the market is still selling off, when the option implied volatilities are really, really high. For most of you, you work and you don't have the ability to watch and monitor the market intraday. So I'm not going to try and put us into short positions, especially not on the notion that we're going to get a correction in here. We need to actually see the breakdown. Once the breakdown happens, was it one and done? Did we get a huge 150 point S&P sell-off and then we sit and grind back? What's the character of that drop? I don't have that information and I don't know. So I'm not going to put us in a position to lose money right now. I've spent the last 2.5 hours scouring, looking for opportunities, trying to find something, trying to see if I might be able to scale in or ease into a position so that we can take advantage of it on a market pullback. Here's what's got me spooked. This coronavirus is lasting way, way too long. More than half the states right now are in phase 3 and they're retreating. They account for about 50% of our domestic GDP, and the number is growing. We've got a lot of cities that are also considering a complete stay-at-home shutdown, going all the way back. That's going to be horrible for small businesses. And we've got another tranche of PPP coming, but it's not going to be enough because we had a $6 trillion stimulus package. Now politicians are haggling over a maybe $1.5 trillion package. These companies can't stay afloat that long. We're going to start to see some real pain and we're going to see some businesses go out of business. If that PPP runs out, companies are going to have to lay off their employees because they don't have the demand for their products. It's not a good situation. I don't like what I see. I've been mentioning over the course of the last few days that if you took the entire S&P 500 and you took 10 stocks in the S&P 500, 10 little stocks, they are up on average 35%. If you take the other 490 stocks and you average them together, they are down 10% on average. 490 stocks versus 10 stocks. That shows you how narrowly defined the market rally has been. It's not a healthy situation. If you think about where all the jobs are, they're not in the tech companies. Tech companies can do an awful lot. The productivity is extremely high. You can do an awful lot with very few people. Not so in the energy industry where you've got refining, you've got drilling and production. Airline industry, very labor intensive, very capital intensive. The restaurant industry is almost all payroll. You've got the hotel industry. You have retail. All of these industries employ so many people, and those are the laggards. And that's where we are not seeing the jobs come back. And when people are at work because of the PPP, that was basically a transfer payment from the government to the workers using the businesses as a conduit. Well, as soon as that program runs out, the businesses that employed their workers to try and keep the ball rolling, they're going to have to lay them off. Employees know that. If they suspect that their job security is in jeopardy, they are not going to spend money. When they don't spend money, the economic recovery takes longer. All of these things are really coming into play. Back in May, I had said, I really need some clarity here. I need to see how everything plays out. If it's a V bottom recovery, great. I want to see how long this coronavirus lasts. Now I know that this is going to be a prolonged event. Even if we get a vaccine, this is still not going to help us for the next 6 months or so. So we're going to have to get through this, and hopefully there won't be too many business casualties along the way. We're hearing that there might be 23 million people evicted from their homes in October if there's no eviction moratorium. We also know that 12 million people didn't pay their rent back in May. People are living hand to mouth. They don't have a lot of money to fall back on right now. They're very, very reliant on these government stimulus plans. If you take a look just 10 years ago when we had the financial crisis, we had a $1 trillion stimulus package. Unprecedented, the biggest ever. Here we are 10 years later. We need to do $6 trillion and we still don't have enough money. It's probably going to be $7 or $8 trillion. So you can see that the magnitude is increasing. That's because debt levels across the board, consumer, municipal, state, federal, have all escalated. The money printing is going on like mad. You're seeing the dollar fall precipitously. You're seeing gold rally on that news. So there are some real warning signs ahead, and I suspect that we could see some credit issues. And we saw credit issues when the banks reported about 2 weeks ago. They dominated the earnings scene, lots of write downs. Bank of America had a $4 billion write down. Capital One Financial, big losses. Now, if we do get a market pullback, I don't know if it's going to be credit related. Is this just a natural pullback? Are people just taking profits? Are they locking them in because tech stocks are a little fluffy? They're a little overvalued. That's possible. And if we get a pullback of maybe, say, 10%, it's very quick. Zip, boom, bang, down to the 200-day moving average, and then boosh, we're off to the races. Okay, well, that may not even set up well for us to swing trade, especially if it takes place in 2 or 3 days, which it can. So I'm not going to go out and put a whole bunch of bearish trades out there. What happens if the market rallies higher from here? I don't know that it will. I suspect that it won't. This is seasonally a very weak period of time. We've got violence going on with the riots all over the place, and we've got the next stimulus bill is being haggled by Republicans and Democrats. They'll get it done at the final hour. It's just not a very good environment. It doesn't breed investor confidence when you have politicians haggling over everything and finger pointing at each other, but they'll disappear on recess and the country will be on autopilot. And that's typically when investors get nervous. You know that I've been pointing to this window. Tomorrow, we've got Google, Amazon, Apple, and Facebook. 4 of those 10 companies that I had referenced are going to be reporting earnings tomorrow after the close. Do they all pull back on the news? Has good news been priced in? Do they tread water? Do they move higher? I don't know what that reaction is going to be either. I suspect, though, that anyone who's looking to lock in profits and to take profits, that is going to happen next week. And even if it's not on the tech numbers that we see tomorrow after the close, It could be next week when we start getting some of the employment statistics in. And I think that we're going to see initial jobless claims gradually start creeping higher again. Last week they were at 1.4 million. That was about 100,000 more than expected. Tomorrow we'll see the initial jobless claims number. I'm very interested to see how that plays out. It could be very weak jobs data next week that's the catalyst for the profit taking. So for right now, I don't have anything that I can sink my teeth into. I don't want to get short because I haven't had that technical breakdown that I'm looking for. When I do get the technical breakdown, I don't know if it's going to be credit related. If it is, then it's going to be a sustained market pullback. And then we can start looking at longer term short positions. I will consider buying some out of the money puts even, but I don't know that that's going to happen, so we're not going to do anything right now. If we do go out and we try and anticipate a market correction right now, and I'm wrong, if the market just sits here, we are going to lose time decay. Market's going to get very, very quiet after the economic news a week from now. These are the summer doldrums. Market won't go anywhere. We could see asset managers just sit on their positions and the market does absolutely nothing until Labor Day weekend. Come back from Labor Day weekend, and we may get a decent market move off of it. So the best thing right now is to wait. Here's the good news. If I see something happen during the week and it sets up a good trading opportunity, I'm going to put a video out. I'm going to send you an email. You'll have the link. I'll do it after hours so that everybody has the same opportunity to enter the trade the next day. That's how I want to handle it right now. I'm going to really need to see things play out, and then I'll send out that email. We'll get into a trade, maybe two trades. We still plan on keeping it pretty light. I want to give you a pretty good example of a day trade that took place today, and it's kind of the same position that I'm in right now. We had this nice little market rally. This is a 5-minute chart. You can see how the market's just poking through and making a new high for the day there. Then it pulls back. Then, oh, here we go. Nice little run up. Just barely got through that high of the day. Same thing here. We just keep pulling back and then making not a big new high of the day, just tiny, tiny, tiny. Well, we had the FOMC statement today, which, by the way, was very dovish as expected, but it didn't really generate much of a market move. And then we could see that these are tiny little candles in here, which is usually indicative of selling pressure. And once they cleared these sellers out of the way, we got a release. Long green candles closing on their high. And as soon as I saw this red candle and that red candle, these two, take out that low right there, then I knew that there was a chance for me to put a short on. And that's exactly what I did. And so I got short up in here. I had the 1OP indicator working in my favor. I shorted here. I covered here. The whole way up right here. Anyone in the chat room could have been watching. Where's Pete? Where's Pete? This thing's taken off. Look, new high, new high. Where's Pete? There we go. Yeah. Pete's going to fire something in here. Oh, here for sure now. Look at this. Two long green candles stacked one on top of the other. I could sense, given the prior price action today, it was 2 steps, 3 steps forward, 2 steps backwards kind of move. And I thought, this is setting up for a buying climax. I'm going to patiently wait. When I see the pattern I need, I'll take a short right here. I did. I didn't hesitate. I took profits right down in here. I'm glad I did because lo and behold, the market shot higher. The point I'm trying to make is that in here, when the market was drifting higher, I looked like a fool because I wasn't doing anything. I was sitting on the sidelines, but I was sticking to my guns because I knew the pattern that I wanted to take advantage of. And that pattern was not buying a high of the day. The pattern was look to see if this rally exhausts itself, try and find a little opportunity for a short in here. That's what we're going to do right now, but we're doing that on a daily basis. I need to see everything come into play. I've been trying to think of ways that I might be able to approach the market right now, and so I'm going to put some trades out there. Please do not ask me what to do with these trades after tonight. Look at them, evaluate them. You are on your own because I am not doing these trades. but these are some of the things that I was contemplating doing tonight. I took a look at the DIA, which is the Dow Jones, the diamonds, and you can see how the diamonds here, I'm going to take off the SMA, and that way we can clear this and we don't have that in the way. Okay, good. And then I'm going to overlay the QQQ. And so here you can see how the DIA spiked way up here back on June 8th, and so did the QQQ. Since then, the Dow has actually pulled back. Well, it's the Dow Industrials, not a lot of technology exposure there. So it has been weak relative to the QQQ. Now, from this high right here, look where the QQQ is now. Much higher, much higher. It's continued to move up. What has the Dow done? It's continued to move down. So we have one index that has relative strength. We have another one that has relative weakness. I had contemplated going into the big earnings announcements tomorrow afternoon with these major tech companies. Maybe a good trade would be to buy some out of the money calls on QQQ. And if those stocks retreat and they pull back hard, we're going to lose money on our QQQ calls. But the Dow has already been weak relative to the QQQ. It would fall pretty heartily if the overall market were down because it has more cyclical exposure and less tech exposure. So if the market pulled back hard on that news and pulled back next week on weak economic data, that trade would actually work out. Even though we'd lose money on our calls, we'd make money on our puts. It's a pseudo straddle, if you will. Well, what happens if the tech stocks really do well? Well, then the Dow puts would lose money, but the Dow would probably grind a little bit higher, but you could see the QQQ absolutely explode higher, maybe get up to 295, maybe even 300. I thought, that's kind of a clever trade. I would consider doing something like that, but I don't want to put everyone in a position where they're guessing constantly. What are we going to do? What are we going to do? What's our game plan? And I know that even though one position would be making money, I'd have people freaking out about the other position. Oh my God, what are we going to do? I'm losing money on the other trade. Are we going to stop it out? What's the game plan? When you buy a straddle, you're going to lose money on one side. Okay, that's kind of the plan. That the gains that you have on the one side are going to more than offset the losses that you have on the other side. A little bit of a more complicated trade. I also had another stock that I had contemplated doing a trade on. I think that this sets up for a good short. It's Harley Davidson. It came out. They had a weak number. Excuse me here. I'm trying to get rid of this overlay here, so I'm going to just remove it, and that way we won't have it in the way. But Harley Davidson came out. You can see they had earnings before the open yesterday. The stock sold off pretty hard, but it was able to grind back and close almost where it was the prior day. Today, though, the stock was actually pretty weak and we had a bearish hammer. The overall number for Harley Davidson was awful. I'm going to click GTC, going to click on this candle right here, and then I'm going to click on that candle right there, and I'm going to draw my upward sloping trend line. You can see how the stock almost came down to that level. And I'm going to put up the 200-day moving average and the 100-day moving average so you can see where they come into play. And you can see that firm resistance level right at the 200-day moving average. Could somebody come in and sell an out-of-the-money bearish call spread using that $30 strike price? Yes, you probably could. Some of you may want to do that trade. If you do, you're on your own. Use a close above $30 as your stop. So yes, that is a possible trade that you could look at doing. But go ahead and take a look at their look at their earnings report. It was very, very soft. There are not a lot of motorcycle sales. Their revenues were way down. And I think that's going to continue, especially if you've got consumers who are very cautious, not knowing if they're going to be able to retain their jobs or if they're going to get laid off. So I think HOG sets up for pretty decent short. There were some other shorts that also looked attractive. Banking stocks, if we get into a sustained market decline, which I don't know that that's going to happen, companies like Capital One would probably be an excellent short. There, if it starts to really accelerate, there you're looking at buying longer term, way out of the money puts, and just sitting on them and letting the market come in. We're not there yet. So I don't have those trades. I don't have that clarity. So we're going to take a pass on it. I will mention that if you're looking for really nice stocks and you're still a little bit bullish and you don't care what I have to say and you think you might want to try and get a couple more bullish put spreads in, then you'll probably find this list to be very good. This is Pop Bull. This is always a great go-to list for swing traders. Very strong. This is really nice. I like that technical breakout through the 200-day moving average. Got a nice upward sloping trend line you could lean on right around that 1260 level, so you could sell 1250 put. It's easy to find these trades. Market first, market first, market first, and I don't have that piece of the puzzle. But I am pretty concerned, and that's why I'm happy that we are in cash. No matter what happens, we cannot lose money if we are in cash. If the market takes off without us, then there has to be some other piece of information that I didn't have before. I'll be able to evaluate it. I'll be able to look at it. I'll be able to decide if that's a buying climax with a reversal right after it, or if it's a legitimate move that has follow-through buying in it. If it does, we'll get right back on it. So I plan on taking some time off right now, and it'll just be a day here or there, but I suggest that you do the same. This is a really good time to wipe the slate clean, not force any trades. If you take a look at the S&P 500, you can see that the trading volume has been minuscule. It's just tiny. There's nothing going on here. Market hasn't moved. It's sideways. Well, let's sell some out of the money bearish call spreads and let's sell some out of the money bullish put spreads. What happens is when you finally do get a market move, let's say like this one right here, you are going to get walloped. And then you can get the bounce back right away and you'll get taken out of the other side as well. We don't want to do that. The risk reward ratio simply not there. We don't have a sense of market direction right now. So for this week, we're going to sit on our hands, and if there's something that looks compelling, you can expect a video from me. I'll try and do one Sunday night. I may not have a pick Sunday night for you, but I'll at least paint the picture. I'll let you know how things are shaping up in the market. We'll do a little bit of a review. We'll get our market bearings, and we'll wait for the opportunity to set up well. And you know that when conditions are right, I've had weekly swing trading videos with 4 picks, 6 picks. I've had 8 picks before. When it's hot and we want to get into positions, I have no problem loading you up with lots of trades. That time is not now. So for those of you who have sent me an email thanking me for not forcing trades, I appreciate that feedback. And for those of you who want to trade and have not sent me those emails, I appreciate it as well. We just got to be patient and we've got to wait. So that's all I've got for you tonight. Please take some time off. Enjoy being in cash. We've had a fantastic run. We're going to get right back on it. We just need a little bit of clarity. We need some decent trades. And when we do start to fire again, those are going to be really good trades. Thanks. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.